January income update. This is Jacob Milliken, owner of 9M Investments, and today we're going to jump into January's income yield from our income bucket. So how do we start the year? Annualized yield, 12.64%. Very, very happy with that. Normalizing a little bit from January's 17.7 yield number, which was a little bit high, just kind of based on how the calendar fell. Some of those early Januaries fell into December. So anyway, that doesn't really change though what drove what our bucket is kind of built of, starting with private real estate, uh, currently with B REIT, Nuveen Global Cities REIT. We're here in the future, I'm going to be adding a third piece of the private real estate piece. Really kind of just focus on sectors that are limited in supply or have great demand. Those are the main features. Those obviously with Nuveen, we also get some global exposure to some markets in Europe, little tiny bits in Asia, Japan. So again, looking for diverse places to find income. Um, Within the portfolio, low volatility is a feature, consistent dividend returns, how you take those returns. There could be some tax advantages. So again, that's what we use this part of our portfolio for. Private credit, currently BCRED, Carlisle's CTAC, and Blue Owl's OCIC. Again, much like private real estate, big portion of this is drives this is low volatility. So you know month to month what this is going to look like in your portfolio. And then very strong income. Now all the returns from a yield on these three have come down over the past few months from their highs when interest rates were as low interest rates have kind of floated through their portfolios. That has come down, but we're still talking 9%, 8%, 10%. So again, very strong yield, and again, very, very low volatility. Again, kind of the important piece there. Within our ETF structures, just a few different names here. One kind of a public version of private credit, a little bit more diversified through several names, CAIE, CAIQ, the new structured income notes within the income wrappers, and QQQI, which is a option strategy built off the NASDAQ, which has been a nice distribution, about 14% on a monthly basis. So again, all these very strong. These are also built into the portfolio for some liquidity, possibly easy to get in and out of if need be for any point for clients. And then the bigger part of our portfolio is structured income notes. 8 notes called in December, a little under 500K from names from JP Morgan, UBS, Goldman Sachs, TD. Um, Fairly busy month as far as getting notes called. An example of a new note that we replaced some of those with was from BBVA, 5-year note, 6-month no call period, annualized 17%. Again, volatility is gold when placing these notes. So, you know, you're able to get some good yields right now because of that. So, closing thoughts, very happy with the 12.4% or 12.64%, sorry. And looking forward toward February, giving you an update. If you have any questions, feel free to reach out. I hope you have a great day.